What's going on, everyone? This is David Fuchs, Wealth Advisor with Carson Wealth, and I'm here with your June market update. We're recording this on June 4th, 2026. Let's get right into it. So let's start off with performance. You'll see here the S&P 500 in May. We crossed that 7,500 level for the first time ever. And the month of May as a whole was very strong. S&P was up about 5%. It's now, believe it or not, up over 10% on the year. And two things that we are encouraged by this rally. Number one, it's been pretty broad based. Energy is up 25% year to date. Technology has made a roaring comeback and is now up over 25% year to date as well. We've had some other sectors contribute to that performance. And then the second thing is corporate earnings, which have been incredible this past quarter. 84% of companies in the S&P 500 came in above analyst expectations. That's the highest number since 2021. So some real fundamentals are driving performance, not just enthusiasm. That's great for long-term investors. And speaking of performance, that rally is actually occurring despite some pretty meaningful headwinds right now. So first, we have inflation. That's remaining a genuine concern. The latest reading had CPI at 3.8% year over year. That's actually the highest level in 3 years. And of course, that's being driven largely by elevated energy prices. And speaking of energy, the second headwind is oil, which is sitting at over $90 a barrel right now. That equates to about $4.50 a gallon at the pump. I'm sure most of you are experiencing that right now. And of course, those prices, that's tied to the ongoing conflict in the Middle East. And until there's a resolution in the Strait of Hormuz, which controls roughly 20% of global oil transports, prices will likely remain elevated. That feeds directly into inflation, which we just discussed, and adds pressure across the broader economy. All right, so conclusion, what's the takeaway here? It's pretty simple. Markets are performing well despite a lot of noise out there right now. And I think it's worth remembering that over the long run, the S&P, it's been up roughly 10% annually. It's a useful reminder of why staying invested, staying diversified is still the most reliable path forward. And that remains our focus on your behalf. Couple things we're watching this month moving forward. Number one, we'll get a fresh inflation data on June 10th. We'll look to see where CPI comes in. Is it continuing to rise? Did we get some relief? That'll be an important day. That's on June 10th again. And then second, we also have our first FOMC meeting on June 16th and 17th. That's going to be the first one under new Federal Reserve Chair Kevin Warsh. We're not expecting a rate cut or hike, but we're watching his comments closely. That will really set the tone for the second half of the year. It'll give us an indication on how the Fed views the economy right now, what it sees in inflation, and their stance on interest rates as we move forward. So that's your June market update. Again, I'm David Fuchs, Wealth Advisor with Carson Wealth. Thank you for watching.